Right now, let's talk more about this summit with Ravi Ramamurti, Professor of International Business and Strategy at Northeastern University and Director of the Center for Emerging Markets, who's joining us live now from Boston. Welcome back to the show.
Hi, Rachelle.
So let's start with some context. We know that BRICS countries alone make up over 40% of the world's population. So what are the group's current goals that we should be paying attention to?
Well, I think growth is a very important goal that they all need to be concerned about. When the whole BRICS concept was formed, all of these countries were growing quite rapidly, and they were expected to become among the top 6 economies in the world. But since then, one of the things that's changed is that China has continued to grow, and it grows at a slower rate, but on a much bigger GDP base. India continues to grow again at a slower rate, but on a bigger base. But Russia and Brazil and South Africa have been struggling. So one of the goals I think these countries would be quite concerned about is how to get back on a path of growth. And there China holds an important card, and that is the faster China grows, the faster the demand for some of the raw materials exported by countries like South Africa and Brazil. So I think they will be looking for some good news on that front as well.
And as you mentioned, you have China's economy that's really evolved and grown to become the world's second largest. You have India seeing very strong growth, but then you have Brazil, Russia, and South Africa that seem to be on a different trajectory. What are your thoughts on whether the BRICS as a group has perhaps outgrown its usefulness or its relevance?
Yes, certainly the world has changed from the time when the concept was first coined, actually without South Africa, but just the 4 BRIC countries. And at that time, even in 2008, China was already much bigger than the other 3 countries put together, almost equal to the total GDP of those other 3 countries. Today, China is more than double the size of the GDP of the other 3 countries put together. And the only countries showing high rates of growth are China and India. Brazil has been stumbling, or is recovering back to growth, and Russia is still also struggling. So the notion that these 4 countries from very, very different parts of the world, very different from each other in many respects, ought to be put together in one club was based on the idea that these were the fast-growing economies that were going to dwarf some of the other countries that were ahead of them in the pecking order. I think that is not likely to happen as we expected. In fact, some other countries like Indonesia may in fact end up getting higher up in the pecking order. So we may need to revisit this concept of which countries should be part of this club. And one way to deal with that might be to enlarge it so that some of the other larger emerging economies that may over time become even bigger could also be part of this club. Indonesia being an example, Mexico being an example, or Turkey being an example.
And we're seeing that one way that might possibly happen is if they perhaps will add more countries to the new development bank, formerly known as the BRICS Bank. So as we take a step back, though, and we look at what else is happening, how has the US-China trade war and some of these other geopolitical issues affected relations within the BRICS economies?
Well, I think it brings them closer together in some respects, because many of them are aiming to sell their products in the US market. And the 2 disconcerting things about the trends in US policy are a tendency towards unilateralism as opposed to working through the multilateral trade system. And the other is protectionism. And if you look back at the last 50 years and look at the countries that have developed and grown very rapidly, it has been largely on the basis of access to the markets of the developed countries. If we are entering a period in which that is likely to change, it certainly dims the prospects for many of the emerging markets. So I think one of the things that the US-China trade war may have done is to bring the countries closer together. Now, of course, in some ways, Brazil has actually benefited because the exports of soybeans, for instance, out of Brazil have substituted for the exports that used to go out of the US. So in the short run, Brazil may have benefited, but in the long run, all of these countries would like to have a system which is governed by rules, which is a multilateral system, and in which countries still remain open to each other's products.
Now, we also have the sideline meetings between Presidents Xi and Bolsonaro. How do you think Bolsonaro will balance his interests in China with his allegiance to the US?
This is, I think, one of the benefits of having the club of the BRICS, because it brings these leaders together for no particular reason and gives them an excuse then to actually build relationships that provide a measure of stability to the global economy. So even though Brazil has, as a candidate, Mr. Bolsonaro has voiced certain positions that may have been dismissive of China, when the reality sets in and you take over the position of the head of the state, and you see the reality, which is that China is Brazil's #1 trading partner. China can help Brazil in many ways with respect to its exports, with respect to technology or promoting innovation. You begin to find a way to work together, and I think that's exactly what we're starting to see happen.
All right, thank you so much, Professor Ravi Ramamurti there of Northeastern University and Director of the Center for Emerging Markets.